Hi, welcome to this snapshot video. We're covering 4 big US tech company earnings. They're all reporting on the same day, that's Thursday this week. And so we want to have a look at some of the price trends involved. 3 of those 4 have seen stellar share price returns over the past year and indeed over the past 5 years. So we want to assess whether that trend can continue. There are some big themes hitting these big technology companies. Potential big US tax repatriation could mean that a lot of their overseas earnings, which are sitting still overseas in cash piles, can be converted at a low tax rate back to the US. That could be a big windfall for investors. But equally, there's a bit of a backlash now taking place, particularly within Europe, against some monopolistic behaviors from these big tech companies, as well as some signs of tax avoidance as well. So after being such good performers over the last year, there's some sign with some of these companies they're losing a bit of steam. So we want to assess the momentum of these price trends and see whether these Q3 earnings can make a difference. So the first company on the dock is Twitter. So this is a weekly candlestick chart of Twitter. As you can see, big share price declines from over 70 down to lows in around 14. So we've basically been meandering around. You can see that we've been up and down above and below the 20-week moving average really for the past couple of years. It's a price range between 14 and 21. What we're looking for is something for investors to really grab hold of and take these shares out above 21. Some sign that an actual turnaround in Twitter's fortunes is about to take place. So once we get above 21, then the chances increase substantially that we can get towards this 30 handle, which was an original base back in April of 2014. Equally, if we don't see some signs of improvement soon, this price range can only hold for so long, and there's a risk that we dip down to $10 and obviously single figures below that key psychological level. Switching gears to Google parent Alphabet, there's been a very strong trend over the past few years. This year has been no exception, but we have turned into a bit of a price range as we've hit this 1,000 level. That's basically proved the top of the range for the time being. You can see price pulling away in the last week from that 1,000 level again. Still within a price range, so no real cause for concern at this point, but should we dip below the 920 level, where you can see this rising trend line captures the lows quite well, that would be a point for concern. So potentially if earnings miss expectations, we dip down to the trend line. If that takes place, then maybe 870, the highs from January and March, and then potentially even the big round number 800, which capped the price for a period during 2016 and late through the mid and then late 2016. Equally, should we eventually get a breakout from what at the moment still does just look like a consolidation, then and if you expand the height of this pattern taking place here, it's pretty much 100 points, and so we can just take 100 points on top of 1,000 at the moment being the high, and that takes us neatly to 1,100. Switching gears to Amazon, and so you can see again here that we saw a big spike high towards the 1,080 level, but then price has meandered to the sideways into a sideways range since then, potentially looking at an inverse head and shoulders pattern, with this being the left shoulder, this being the right shoulder. But we really need a drop through this 930 level, the bottom of this this range that I've drawn on here, to confirm a breakdown through the neckline of the head and shoulders pattern. That may just find support at the 850 level, which capped prices in the latter half of last year. And should that 850 level give way, then we could be in for a much steeper decline down towards the 700 level, which was an early top in the price back in 2015. Switching gears to Microsoft, probably the strongest trend, even though it's the oldest company of those that we've been covering here. We're just shy of the 80 level, so 80 being a big round number. After a strong set of gains, some impressive earnings in Q3 could put us up to 80, and maybe that would then be the catalyst for a slightly bigger pullback. But still no signs that the uptrend is given up just yet. 74, one of the highs from back in July this year, could be an area of support which might come in just in around the 20-week moving average. Should that 72 to 74 level give way, it would be notable if we did get to 80, then obviously a 10% pullback would take us to 72. If actually the stock was in for a larger 20% pullback, then obviously, 16 of 80 would take us down to 64, which was a little kind of a pivot price level back in the later stages of last year. So that's it for this snapshot video. We're of course covering these 4 big US tech companies which are all reporting earnings on Thursday, with the exception of Twitter, where we're potentially looking at a turnaround story with a potential bottom in at 14. These other big tech companies have been going great guns, but perhaps losing a little bit of steam. We're looking to see if this Q3 set of earnings results can catalyse a pullback in the shares or perhaps a breakout to new highs. Now, of course, if you did enjoy this video, please subscribe to LCG on YouTube and Facebook.